My name is Mike Sullivan. I'm a former IRS agent. Welcome to my YouTube channel. My YouTubes are short, sweet. My short and sweet too, and it's right to the point. They last about 3 minutes. I've worked about 10,000 cases. Been doing this a long time, so whatever I tell you is exactly the spot-on truth. So I want to talk to you about 5 ways that you can get rid of your IRS debt. In working all these cases, there's a lot of things you may or may not know about the collection division, but these are the basic 5 ways of getting, or 6 ways of getting rid of the IRS debt. First, you can full pay. I know it's not a no-brainer, but it's still one of the ways. Second, you can have your case put in currently non-collectible or hardship. What is currently non-collectible or hardship? It means IRS has looked at your case. They've reviewed a 433F, their base financial statement, or the 433A, the revenue officer, and determined after they looked at the documentation you currently cannot pay your taxes. They then put a freeze code on your account. However, penalties and interest still run on that liability, and IRS is going to take your refund every year, so you may want to adjust your W-4. Little trick people don't know about. So those cases usually can come out in 2 or 3 years, or it's possible you could beat out the statute of limitations on cases. There's ways you can get that done, but I don't explain those. That's private information. The other thing that you can do is get to a payment agreement, a streamline agreement. Some people can just go online and make the payment. Others, you don't qualify for it because you just fall in that gap. The third way is an offer. Oh, by the way, 40% of all open inventory cases wind up in payment agreement status. You can file an offer and compromise. Last year, 21,000 people got their offers and compromise, or pennies on a dollar, accepted. But there's a lot of people out there advertising pennies on a dollar. I taught the offer program at the Internal Revenue Service, and it's not like you think. Just a base rule for an offer and compromise: you must give IRS your total liquidity and all your assets. So they discount your residence 20%. So if your discounted residence value is $50,000 and you got an IRA and a car and money in the bank, when you add that up, that is the first part of the offer. You must give IRS that. IRS is not going to discount any less than that. Why? Because they can take it. The next thing you can do is file a Chapter 7 bankruptcy. There's 3 general rules under the United States Code. Is you have to be, their taxes have got to be 3 years or older, filed for 2 years, and assessed for 240 days. The next very popular way is that your taxes go away by statute. IRS has a 10-year collection statute of a statute of limitation. So with that, after 10 years, and by the way, the 10 years is not on the tax year, it's from the date of the assessment. What's the date of the assessment? The date of the assessment is the day IRS actually puts your case, your bill on their computer system. The only way to find that date of assessment is to pull an IRS transcript. So those are the various ways to take care of your tax debt. For you do-it-yourselfers, your key is going to be your financial statement. If you got a large debt, you shouldn't be doing this by yourself. But for other people who have smaller debt, you can take it upon yourself, but you know where the pros are. Thank you much.